In today's episode, I'm going to teach you how to start day trading, and I'm going to break it down into 7 simple steps that you can begin following today. I will also be giving you a recap of my trades from this morning. I'm currently sitting at $35,130.65 of profit on the day. Through this episode, I'm going to share with you the strategy that I use to produce those profits. My name is Ross Cameron. I'm a full-time trader, and I funded my first account in 2001, more than 20 years ago. I've been through a lot of ups in the market, and I've had my share of downs. My hope for you is that you're able to piggyback off all of the years of experience and educated intuition that I have, so you can avoid some of the rookie mistakes that I and many other traders have made before you. Here's what I'll tell you. Most beginner traders lose money. That's not because they don't try hard. It's not because you don't really want to make it happen. It's for one of two reasons. The first is most beginner traders fund an account with real money. They start punching the keys, and they're really shooting from the hip. They don't have a strategy. They don't have a system or a set of rules. They're inconsistent with the way they approach the market, and their results match. Inconsistent and generally losing money. Now, the second group of traders have been taught a strategy. Maybe they've learned a strategy like the one that I trade every single day, and yet they still lose money. And that's a little confusing because it's like, wait a second, I've got a strategy. Other people are trading it profitably, but I'm not. Where's the disconnect? And the disconnect comes from an inability to have the discipline to follow the rules of the strategy. And some of the rules that are the most important is knowing when to cut your losses. So I'm going to present you right now with a challenge. You may see the Christmas wreath behind me. We've got 4 days until the new year. So I'm going to present you right now to take the leap with a New Year's challenge. I actually began trading, for me, day trading, as a New Year's resolution. And this is what I did. I made the commitment that every single day I was going to sit down and I was going to follow this certain schedule and this certain set of rules. I'm going to give you the strategy that I trade in my own account. The only thing I ask is that you bring the discipline to the table, because that's the one thing that you need to bring. So I'll give you the strategy, we pair it up with your discipline, and that's where the magic happens. All right, so let's go ahead and dive in. I've got the whiteboard here. We've got a slide deck. We've got a lot to cover. I'm going to break down the process of learning how to day trade and becoming a day trader into 3 phases. The first phase is all about gaining experience. The second phase is your proof of concept before going live with real money. And the third phase is trading with real money. Now, some of you, you've jumped right to phase 3, trading with real money, but you may not have been ready for it. And that's where you incurred those unnecessary losses. So we're going to break down the 7 steps of how to get started. And I'm going to share with you what each phase they should occur in. And I'm going to encourage you to follow this strategy. But I want to remind you to practice in a simulator before putting real money on the line. All right, take it slow and prove to me that you can be profitable before you throw hard-earned money into the market. What happens for most beginner traders is, and you might already know this, day 1, you fund an account with real money and you take a big loss. And all of a sudden, after that loss, you feel sad, right? I've been there myself. So you feel sad, you feel disappointment. And the best way to feel happy would be when your account goes back up into the green. And so in this place right now, what are you feeling? Anger, frustration, disappointment, a bit of desperation. Desperation to get green as quickly as you can, which means all of a sudden you reduce your threshold or your quality standard of what you're willing to trade. You start grasping at straws and you start just spiraling, taking loss after loss after loss. If you've already gone through that spiral or you're in the midst of that spiral right now, in today's episode, I will teach you how to break that cycle and how to get yourself instead from a negative spiral onto a positive spiral, because that's exactly what I've been on this year. Being up $35,000 on the day, I mean, we're coming to the end of what has been really a fantastic year. I'm just over $2 million in gross profit on the year. Now, I'll tell you, my results are not typical. I have been doing this for a long time. And that's what really, I suppose, gives me part of my edge, is that I've got a lot of educated intuition. And so when I see a chart, I'm able to make a prediction of what I think is going to happen next. I'll share with you how I've gotten to that point. So step 1 is committing to a schedule. And this is part of phase 1. So phase 1 is all about gaining as much experience as you can. So in phase 1, I want you to be in a trading simulator. So step 1 of phase 1 is simply committing to a schedule. So the stock market hours, well, market opens at 4 a.m. Eastern Standard Time. So 4 a.m. and it's open all the way till 8 p.m. So in truth, we have a very long window of the market being open. The question for you is, when within that window do you want to focus on trading? Now, if you're in Europe, you may say, look, I can start at 4 a.m. That's no problem for me. But for some of you, 4 a.m., that's not going to work. You're in California, you're in anywhere in the United States. Getting up at 4 a.m. Eastern or 3:30 to trade at 4 a.m., that's pretty early. So what I do right now is I start my live broadcast at 7 a.m. right here. So 7 a.m. is when I begin streaming. And this is also when most commission-free brokers come online. So the commission-free brokers like Thinkorswim, Robinhood, a lot of these brokers, they come online at 7 a.m., which means even though the market is open from 4 a.m. to 7 a.m., those brokers won't allow you to trade during that window. So right now, I would say the sort of unofficial market open is more like 7 a.m. So I trade from 7 a.m. until right now, typically about 10 a.m., and then that's usually when I stop for the day. So I have about a 3-hour window here from 7 to 10 where I'm the most aggressive, where I'm trading most actively. From 10 a.m. until 4 p.m., which is the official closing bell, I will sometimes trade if we have stocks that are moving really nicely that began earlier in the day and are just continuing higher. And from 4 p.m. until 8 p.m., typically the only stocks that are moving are stocks that were really strong during the afternoon trading session or that are coming out with breaking news at 4 p.m. So the market open of 9:30 and the close at 4 p.m., at this point carries a lot less significance than it did years ago. Now, there are some nuances of things that you can do during regular hours that you can't do during pre-market or extended hours, including trading with options, using market orders or using stop orders. You can do all those things during regular hours. You can't during extended hours. But for most active day traders like myself who are focusing on trading the biggest percentage movers each day, these tend to be lower price stocks that don't have options, contracts anyways, and you probably wouldn't want to use market orders on because they're so volatile. So for traders like myself, starting at 7 a.m. works just fine. So when I was getting started as a New Year's resolution, and I'll tell you, it doesn't matter if you're watching this in July, you're watching it, in the middle of summer, it doesn't matter, because although the New Year's resolution is kind of a nice extra boost for encouraging discipline, ultimately your decision to be disciplined in your trading, you can enforce that anytime you want. It can be in May, it can be in April. It doesn't matter. It doesn't matter the month of the year. It's about you making the commitment and saying, I'm going to be disciplined about following these rules every single day. So for me, I began day trading as a New Year's resolution. And it was a time in my life, I was in my 20s, and most of my friends were working in restaurants. So they got out of work late. So, we would usually get together 10:30, 11 o'clock at night, midnight. And then I'd be up late at night, and then I'd sleep late into the next day. They did too. And then, I kind of had my work that I was doing sort of while I was on a schedule where I could work whatever time I wanted. So I could just work in the afternoon. So for me, the work that I was doing was running out. I knew I was on basically like a freelance contract and I was going to run out of work. So when that work was ending, I was like, all right, I see the writing on the wall here. I've got to find something else. And it was in a time that the economy was really terrible up in Vermont. And I just thought, maybe I'll try this trading thing. I had a friend in high school who had made $16,000 trading a penny stock. And I thought, if he could do that when we were 16, 17 years old, whatever it was, let me give it a try. And I had already dabbled in the market a bit, having funded my first account in 2001. So I said, you know what, I'm going to try this. But the big battle at that time was just waking up in time for the opening bell. So I said, I'm going to put myself on a schedule. I'm going to set my alarm. And those first couple days, the first couple weeks, it was tough, but I started just getting up. And the problem for me was that I didn't really know how to approach trading. So I got up at 9 a.m. and what do? I pull up my computer and I go to marketwatch.com. I go to Yahoo Finance and I'm just kind of like, okay, well, just looking kind of at stocks. Like I don't really know exactly what to look at. And that was a big problem for me. So one of the things I'll say for you guys right now is that I'm starting my live broadcast every day at 7 a.m. So if you wanted to join my live broadcast right at 7 a.m., you'd be able to join the broadcast at 7 a.m. and listen, up till 10 a.m. So you'd have this nice window where you can be listening and watching over my shoulder and getting a sense of what's moving in the market. But regardless of whether or not you want to be in our community or you want to do it on your own, your first order of business is to create a schedule and be consistent about following that schedule. So if you're able to set aside a couple hours, even just 2 hours a day, where you could watch the market live, that would be awesome. So this is your window. Choose a time within this window where you can watch. Now, if you could do it between 7 a.m. and 10 a.m., you'll have the added benefit that you could also watch during my broadcast while I'm streaming. If you want to do earlier, that's fine. If you want to do later, that's fine. I will say that the volume peaks during this window, and it's usually lighter early, and it's very light towards the end. So this is the number one window. I would say the number two window right now would probably be 9:30 to about 4. This would be number two. Number three window for me right now would probably be 3:30 to 5, number three. Number 4 would probably be over here right at 4 a.m., from 4 a.m. to 7 a.m. And then the final, last option, number 5, would be 5 to 8 p.m. So that's kind of how I would do it. And this is sort of based on when we are more likely to see the most volume in the market. So once you've made a commitment that this is going to be your schedule that you're going to follow pretty much every single day, step 2 is beginning to practice in a trading simulator. Now, I recently did an episode on the best stock market simulators that you guys could check out. I compared these 3 options of Thinkorswim, Webull, or the Warrior Trading Sim. Now, these it depends on what you want from a simulator. If you're thinking about practicing the strategy that I'm trading every single day, you're going to want one most likely that's pretty quick. This is the Webull simulator here. I've got the Thinkorswim sim right here, and the Warrior Trading Sim I also have in the back. So let's just I'll do 1,000 share order. We're on, let's see, I'm going to do this stock here. So let's just do 1,000 share market order. So 1,000 shares in there, 1148. So you can see I've got my position. 1,000 shares back out. Got in, got out, break even, made no profit. Easy, pretty easy trade. So Thinkorswim, you can practice trading just like that. You'll have your charts, you'll have your level 2 window, and you'll learn all about all these windows and everything else as you watch more classes that I teach. Over here on Webull, I will say that I'm going to do a hotkey. Oh no, sorry, I can't do hotkeys in the simulator. I'm going to do the buy order here. I'll just do this. Let's see. So why is it saying not available? Let's switch to a different symbol. We'll switch to the same symbol we were doing before. So I'm going to do this here. I'm going to move my order up to 1250. Click this. So my order's here, and it's sitting. Watch how long it takes. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. We're just sitting here. We're twiddling our thumbs. This is getting silly, right? So I put the order out there, and it's just sitting there. It's not filling. So I can click cancel that order. The order's been canceled. Oh, it finally completed. So there, it finally went through, right? Just sort of right at the hair end there. So if you do maybe smaller orders, we could try doing 100 shares to see if that's faster. So we'll click the buy button. Here it's sitting. We'll see if this is any faster. The problem with Webull is that the simulator generally is slow. It's not very fast. So you can use it, but it's slow. The problem with the simulator at Thinkorswim is that it often is slow as well. And also, you can't use it during extended hours. You can't use it pre-market. So unfortunately, the Thinkorswim simulator, which is free, is not really a great option. Webull is too slow. If you fund an account with real money, you could trade with 1 share, and that would be effective. If you want to use the Warrior Trading Simulator, that's fine. You could use that as well, and I'll pull it up right here. So we'll just do WKEY. So you can see this is pretty much instant bought 1,000 shares, sold 1,000 shares, bought 1,000 shares, sold 1,000 shares, right? So just as quick as you're getting in and out, pressing the button, your orders are getting filled. So you want to choose a simulator that matches the strategy that you're trading. If you're planning to swing trade and you're going to hold for a couple days or whatever the case is, Webull could work. It's just going to be slow. It's slower to execute. It's just as simple as that. So if you want something that's going to be a little bit faster, then you're probably going to you're probably going to want to go with either something like the Warrior Trading Sim or maybe one of the other options out there. So, all right, so I'm going to put that over to the side. So regardless of which platform you use, trading in the sim forces learning, because all of a sudden you're in the simulator and you're like, okay, well, what are these order types? Just limit, market, stop, stop limit, trailing stop, quantity, extended hours, time and force. And so you're really forced to begin learning how to use the software, what all these buttons mean. And that's really helpful. So the more you're trading and the more you're practicing, the more you're going to learn all of the terms and everything else kind of related to trading. So I think it's a good idea to kind of get your hands in there and just start trading, because you start to learn all these kind of important terms and concepts that you need to understand with trading. And you're able to do it in a safe environment where you're not risking losing real money. You're just going to start practicing and you just start trading what's moving. So now the question is, well, what do I trade on any given day? So if step one is to set a schedule, step two is to practice trading the sim, I would say step three is beginning to refine a little bit of a strategy and taking an approach of how you're going to trade every day. Now, if you want to download my small account worksheet and my trading plan, I'm going to put a link. It'll be pinned to the top of the comments and linked in the description, where you can download both of these. My small account strategy is a PDF you can download, print out, and my trading plan worksheet will actually break down for you a trading plan that you can follow in your own trading during these early days of practicing in the simulator. So one of the things that's going to be important is figuring out which stocks should I be trading, right? What am I looking at? Now, my approach when I was pulling up Yahoo Finance and MarketWatch, in sort of those days, was I would just read about stocks that were being actively traded. I would just, anything that had a headline, I would just read the headline. So the problem was typically the stocks that had headlines were like Apple and, these big companies, right? And the fact was, with a small account, I couldn't afford them. So I realized, because my friend had made this money trading penny stocks, that I was probably better off focusing on penny stocks as well. So I began to Google search penny stocks that I should trade. And what I ended up doing was discovering that there's a lot of websites out there that will send you email alerts and text alerts, all this stuff, to try to encourage you to buy penny stocks. And most of those are just blatant pump and dumps. These are stocks that are going to go up and then they're going to crash. They're going to drop 90%. And so I broke the ice and started trading some of those. And guess what happened? I lost money. So I was like, okay, trading garbage penny stocks is not going to be the ticket for me. But there's got to be something else. And so I ended up discovering that each day, there's usually a small handful of stocks that are making big moves. And I'm talking about big percentage moves, like the stock that I trade today, MYSZ. MYSZ was up about 115%, well, maybe 125% at its peak. And this is a stock that had a catalyst. It had breaking news. The news headline was they present year-over-year growth, 2025 targets $15 million of revenue, anticipates a strong 2024 close to 100% growth from 2022. So 100% growth and the stock goes up 100%, basically in a matter of a couple hours. So we went from about $5 all the way up to $9, pulled back, then a pop up to about $10.78. So the reason that stock made this big move was because it had a catalyst. So there's a lot of websites that you can use that will give you just a free list of the stocks that are up the most on any given day. And so I started going to those websites and checking them each day. Now, actually at Warrior Trading, we have a page that that'll give you that as well. So if we scroll down here, this is the scanner of the most active stocks today. And this will give you the stocks that, and it updates every day. This will give you the stocks that are up the most on the day. So you can see the price of the stock and how much it's up and the volume and this and that. So this is a very helpful scanner that is totally free. Now, if you want to use real-time data, so that scanner has a 15-minute delay, which is what all free scanners will have. They'll have a 15-minute delay. If you want to use real-time data, then you could use a platform like what we have at Warrior Trading called Day Trade Dash. So this platform will give you real-time access to market data. And so in real time, as a stock like MYSZ has breaking news that comes out at 8 a.m., you don't have to wait 15 minutes to find out. You find out immediately. The stock triggers an audio alert, it's hitting the scanner and it's moving up, and that gives you the sort of like the awareness of, okay, this thing is moving, and then you pull the stock up on your charts and you begin looking for an entry. And this is the way that I think most beginners should practice in a simulator, to look for stocks that are moving. So as soon as you see a stock hitting your scanner, the next thing that you want to do is you want to go ahead and pull up that stock in this order entry window. So it's WKEY or it's PDYN. And now you get to start watching the quotes. You get to start watching the charts. You get to see how this stock is moving. So, all right, now it's dropping down. And if you do this, if you commit to doing this every day for your 2-hour window, whatever it is, however much time you can spend, 3 weeks from now, 6 weeks from now, a couple months from now, you're going to know a lot more about how the market works. You're going to learn about charts. You're going to learn about how to read technical analysis, how to use technical indicators, what all of these lines mean. You're going to learn what all of these numbers mean. And you're going to be forced to learn just by sort of throwing yourself into the deep end and being forced to swim. Now, the nice thing about practicing a simulator is that through this period, you're not losing any money. You're not risking any of your own money. You're just practicing. You're just getting a feel for how the market moves, for how things are working. So this is a safe environment. And this is the right way for beginners to learn how to trade. So generally the stocks that I trade and the stocks that I make the most money on will meet these 5 criteria. So these 5 criteria are included in the PDF downloads that you guys can download. So these 5 criteria represent an imbalance between supply and demand. In order for me to make $35,000 in one day, we need to have an imbalance between supply and demand. That's what allows a stock to make these, this type of big move. So the first 4 items here are characteristics of demand. Now, most day traders prefer stocks between $1 and $20. They're more affordable when you have a smaller account, and these are the types of stocks that are more likely to go up potentially 100, 200% in a single day. So number 1, the stock should be priced between $1 and $20. Number 2, the stock should already be up at least 10% on the day today. Number 3, the stock should have 5 times higher volume today than its average. And that's typically going to happen when you have a stock that has a good news catalyst. The news that came out today is what brings in all the volume. Number 4, there should be a news event moving the stock higher. Okay, easy. And number 5, the float or the number of shares available to trade should be less than 10 million shares. And so today, if we look at MYSZ, has 1 million shares available to trade. It's a 1 million share float. It was up 100%. Look at the volume on this. Typical volume. Now, the average volume over the last 30 days has been like 5,000 shares a day. 50,000 shares a day. That was a 5,000 share day, but it looks like you've got a couple 80,000 share days, 5,000 shares, 40,000. So let's just say maybe 40,000 shares a day, average daily volume. And then all of a sudden, a couple days ago, it traded 121 million shares of volume. It pops up, makes a big move. It pulls back, and then today it's got 30 million shares of volume as it's got another news catalyst. And all of a sudden, that sends the stock higher. So this stock met all 5 criteria for being worth trading. Now, if we looked at other stocks that are on the scanner, we could evaluate all of these stocks and ask ourselves, how closely do these meet our criteria? Now, one column that's important to note is float. Float is the number of shares available to trade. And you can see, I'm only interested in the floats that are under 10 million shares. So that means I'd be interested in this stock. And I did trade it today, but I only made $28. I'm not going to be interested in this one. I would be interested in this one. I didn't trade it this morning, but I would have been probably interested. This one's floats too high, floats too high, floats too high, floats too high, floats too high. So just by using the float as one of our criteria, we've eliminated 8 out of the 10 leading gainers, and we've narrowed it down to just these 2. Now, at any given time, the market, of course, is moving. So at this time right now, this stock SYTA is up about 35% from the previous day's close. So it's up a bit, but it's not up enough to make it one of the top 10 leading gainers in the market. And that means it's probably not going to be obvious. So when you use a platform like Webull or you use Robinhood, a lot of these platforms right on the mobile app, they'll give you these notifications of stocks that are making big percentage moves. These brokers make money the more you trade because of payment for order flow. They get paid by institutional traders who essentially scalp every single one of your trades for fractions of a penny. And all of that is billions of dollars of profit for the big firms. They share some of that profit with your broker, which is what allows your broker to offer commission-free trading. So these brokers are going to be incentivized to encourage you to trade as much as possible. The more you trade, the more money they'll make. So the stocks that are up a lot on the day end up having a lot of attention on them. And it's in part because of this incentive that the brokers have to give you FOMO, to show you what stocks are moving, to show you what you missed, to encourage you to trade the next day. So you've got to remember to mind, your FOMO, to keep it in check, to capitalize on volatility in the market without falling victim to chasing the market and just buying at really irrational places. So what I like to do is to wait for pullbacks like this right here. So let's say as part of your workflow and as part of this challenge, you're going to sit down every single day. You've got your window, and let's just say it's from 7 a.m. to 9 a.m. You've got a 2-hour window right there. So you're going to pull up the stocks that are on the scanner. All right, so we get a stock like MYSZ here, or whatever. It doesn't matter what stock. It could even be this stock here. So you want to see a stock pop up. And rather than buying at the very top right here, you want to let it dip down. And then as it curls back up, buy the dip for that move back up. So MYZS gave us similar kind of patterns where at the beginning of this move, we got these little dips. So we got a nice little dip here, we got a nice little dip here, and then a curl back up. We even got a little dip right in this area. So you want to be focused on catching those dips. So you're buying on a pullback where you can manage your risk. So now you're choosing the right stocks each day and you're focused on buying these dips right here and taking profit into these extensions. So let's say you do this for a stretch of time. All right, you're showing up every single day, you're doing your 2 hours a day, and let's say you're trading side by side with me. Now, for what it's worth, and this isn't going to be relevant for those of you guys that are watching this in July or August, but for those of you guys that are watching this right now, we've got our New Year's sale going on at Warrior Trading. So these are special discounts on your Warrior Starter, your Warrior Pro memberships, or the Warrior Pro special bundle. Now, this special bundle will give you access to my live audio-video broadcast for a full year. So that means if you take me up on this challenge, you're not doing it on your own. You could trade side by side with me for the entire year. Every single day, 7 a.m., when I open the stream, you could be right there listening in. So you'll hear my market commentary. You'll see my P&L as I'm trading. You'll hear me talking about, all right, these are the stocks I'm watching. I'm looking for, this stock right here. It's our leading percentage gainer. I'm looking for a dip on this. I'm looking for a potential entry. And this is what I will be doing every single day. So now it's kind of the choice is up to you of whether or not you want to be part of a community that is trading every single day this strategy, or if you want to try to do it on your own. And I think it makes a lot of sense to trade in a community. So step 4 is to review your metrics. Now, the important thing about reviewing your metrics is that in all of your practicing, you're accumulating data. Every single trade you take has data associated with it. The price of the stock, the time of day of the trade, how much you were up, how much you were down, the float of the stock. There's all this data that you can pull from that stock that you traded. So what you want to do is either use a simulator that will give you your data. So it'll present to you, and in real time, it'll be showing you your accuracy, your profit to loss ratio, the average winners versus the average losers. It kind of breaks it all down for you. You either want to use a platform that offers that, like the Warrior Trading Simulator, or you want to import your trades to a third-party analytics website that will give you the reports for you. And so what I'm using for my real money account is TraderView. So TraderView is a platform that's $49 a month. And I don't have an affiliate relationship with them. So if you use them, that's fine. If you don't, that's okay too. It's up to you. But you can import your trades. So you can go to import trades. You can import from all of these different platforms and brokers. You can even import from the Warrior Trading Sim if you really like TraderView better than the metrics that we provide. But you can import your trades. And then when you get the import, you import it, you can see all of these details about your profitability. You can see, and we could just look for me at year to date. So year to date right now, just over $2 million in trading profits. That's gross profit. And my accuracy, 65%. My average winners are $900. My average losers are 613. My biggest winner this year was 42,000. My biggest loser was 24,000. And we can look at all the metrics. We could look at the profitability by day of the week, the profitability by time of the day, which is primarily during the window that I'm trading the most. Profitability by price of stock, primarily between 2 and 20, but really between 2 and 10 is where I do the best, and between 10 and 20 is a little bit less. So the importance of doing this is, let's say you have a month, and I'll just give you an example, where your metrics aren't so great. So you've got a month here, and it's like, ooh, I've got a lot of losses right here in this range. Maybe I should stop trading stocks over $10 for a little bit. And what happens to a lot of beginner traders is they're losing money, but they don't know why. They don't really understand what they're doing wrong. Now, they may recognize that there's an emotional component. They're giving into FOMO. They're not following the rules. They're holding their losers too long. But maybe not. Maybe they're following the rules quite well, and they just don't understand why I'm not making more money. And so your metrics will tell you exactly where you make money and exactly where you lose money. And so if you're not looking at your metrics, it's possible that the answer for turning your trading around is right there and you just haven't looked at it. And that would be really sad, because all you have to do is pull the data. So now for the month of April, moving forward, I was like, all right, I should probably make a little bit of an adjustment. And I did, and I stopped trading, focusing on higher price stocks, and I kind of doubled down on that price range that I was doing really well in. And then that was, a much better month for me. So it's important that you collect your data and data mine it, and see if you can draw conclusions about what is working and what's not working. So this is still all part of phase one right now. You're just trading a lot. You're gaining a lot of experience. But we're going to get ready to switch to phase two. So phase two is your proof of concept for going live with real money. So what we're going to do in phase two is go on to step 5, and we're going to adopt a simple trading plan. And this is the trading plan that you guys can download that's pinned to the top of the comments and linked in the description. This is a trading plan that I use in my own trading, and that I especially use when I'm doing small account challenges. Small account challenges for me force me to focus just on my bread and butter strategy that I'm the most confident in. So I'm not going to take higher risk setups that may work, but just carry more risk. When I've got a small account, my back's up against the ropes. I can't afford to take a lot of risk. I've got to be really disciplined about quality setups, trade the best, and leave the rest. So as part of this simple trading plan, we're going to have an overview of the strategy that we're trading, which for me is momentum trading of the leading percentage gainers on the front side of the move. Momentum means I'm trading something moving up. The leading percentage gainers means I'm trading one of the stocks that's on the top of our scan. So where did we put our scanners? So one of the stocks like MYSZ was today, that's at the top of the scan. And trading the front side of the move means that you're trading that stock when it's still moving higher, and you're not trading the backside after it comes back down. So it's very common that you'll have these stocks that make these really big moves, and then they come back down a little bit, and then they often will make another leg higher. But I like to only focus on trading the front side of the move when it's making these new highs, and not overtrade the backside, which is when it gets choppier. So knowing the places to trade these is equally important as choosing the right stocks to trade. All right, so we'll back this out for a second. So we have an overview of the strategy. We have a time of day that we're going to focus on trading. Now, again, if you're going to do the same time as me and you're going to log into the chat room every day and listen to my broadcast, that's awesome. If you're going to choose a different time that works better for you, that's fine too. Type of stock, price between 1 and 10. That's kind of my refined sweet spot. Float of under 10 million shares. should be up at least 25%. So we're going to juice that up just a little higher just to increase the quality standard. With news, relative volume of 10 times instead of 5 times. Let's boost that up a little bit more too. Higher relative volume, that's going to mean the stock is even more obvious. Finding stocks using scanners has to be in the top 3 leading percentage gainers. And then the technical setup, buying the first pullback, bull flags, when the MACD is positive. That's a technical indicator. I've got a bunch of episodes that I talk about how to use it. So using the MACD on my charts and focusing on trading when it's positive. Max daily risk versus profit target. As a beginner, $25 of risk, max loss is 25, profit target is 25. So 1-to-1 ratio there. Daily goal is $25, max loss is $25. Starter size, 50 shares. And until I'm up more than $10, I don't increase to 100 shares, which is my max size. The goal is to scale to 500 shares until I have a daily profit target of $250, and then increase to 1,000 shares and continuing to scale up. So this is all about building a track record. This period of proof of concept is basically where you say, I've been trading in the sim for a little while. Maybe it's a few weeks, maybe it's a few months, however long. I've gained some experience. I seem to be getting refined at making money, and I want to test myself to see if I'm ready to go live. How do I do that? You follow this proof of concept game plan. So with this proof of concept, you're going to have certain guardrails that you're going to implement in your trading. Number 1 is I'm going to stop trading if I hit my max loss. Number 2, if I have 3 big losses in excess of X amount on the day, I'm going to walk away. Now that may put you below max loss, but it may not. You could have 3 winners and then 3 losers, and then you're going to say, all right, I've got to step back. If I give back half of my day after crossing a certain amount, this is when I'm going to stop. I'm going to be aggressive on the front side and then abandon the stock when it fails to keep going up. This is about being really aggressive when stocks are strong and not overtrading the backside. I'm going to ask myself for an honest assessment of the market sentiment today, an honest assessment of my own emotional disposition today. And I'm going to try to hold a peace until a final exit indicator. And I'm going to remember that this is a game of survive to thrive. It's a marathon, not a sprint. Small green days are good. And these are guardrails that I'm going to use through the rest of my trading, through all phases. For the rest of phase 2, phase 3, just forever, basically. These are rules to implement and to keep just always kind of there to remind yourself to stay focused. So now phase 1 was gaining experience, and phase 2 is this final proof of concept, and it's a test. The test here in phase 2 is to take just 1 trade a day for 10 days. And the goal is to see if you can make money. You really want to try to make money. So during this phase, the real money of trading, getting ready for trading with real money, the guardrails on your trading will be the tightest, because this is the time where you need to build a track record of consistency. That track record becomes your source of confidence. So let's say right now, let's just say for the sake of argument that today I took a loss of $35,000. Instead of being up $35,000, I was red $35,000. That could feel devastating, right? That could be a huge loss. What would give me the confidence to get back on the horse tomorrow, right? To come back into the market? And I would say what would give me the confidence is looking at this equity curve right here. This is context. So I would say, well, wait a second. I'm up how much? $600,000 in the last 30 days. Being down $35,000, it's not great. I'm not happy about it, but I can recover it because I'm still the same trader who did all of this. Now, when you're on day 1, brand new trader, you don't have that track record. So when you start losing, you don't have a source of sort of truth to tell you that you actually do know what you're doing. So what you're going to do is you're going to build this source of truth. You're going to build your own historical data in a trading simulator. So now, if you have a loss, you can go back and say, well, I'm still the trader who did this. And it doesn't matter that it's in a sim because it was a period of time where you were practicing, you were following the rules. It was not luck. You were following your strategy. This was the result of skill. This is a byproduct of being disciplined. And so it's very important to build this is through your proof of concept phase, to build your historical data. So we're going to focus on building historical data. And the goal here of these 10 trades is that you'll have 6 or more winners, 60% accuracy, and that you're profitable from those 10 trades. This now shows that you've gained the experience that's culminated in educated intuition, that you've got the right idea. Your accuracy is good. Now, when you're focusing on just one trade a day, you're going to take the best trade. You're going to be more cautious. If you see something that's not quite so great, you're going to say, nah, I don't think it's worth it. You're going to wait for A quality setups. So now you've got 6 winners, accuracy 60%, you've got profitability. All right, now we're going to proceed to phase 3. The negative result of this proof of concept test would be that you've got more than 4 losses, which means accuracy is 50% or lower. So you've got poor accuracy, and it means you likely need to spend more time practicing in the simulator, but you could continue for another 10 days to see if you can do better. If your accuracy is above 60%, but your profit is negative, then it means you've got one big loss that wiped out all your other winners, and that's a problem as well. So you've got to get better at cutting losses faster. So regardless of the result, you will know what you need to do. It's either get ready to flip the switch to real money, or go back to the sim or stay in the sim and keep practicing, keep gaining experience, and then come back and do the proof of concept test again in a couple weeks and see if you can have a better result. So at Warrior Trading, I often ask members to send in their calendar of doing the 1 trade per day challenge. And I love seeing these calendars where it's not about money. It's not about making a lot of money. It's about building consistency. Remember what I said in the beginning of this episode? $10 a day. We have a member at Warrior Trading. His name's Danny. We recently did an interview. It wasn't that long ago. Let's see if I can find it for you. So he, for his first 6 months, was focusing on $10 a day. So $10 per day. And he's now been able to scale his strategy all the way up to over $300,000 on the year this year. In fact, I'll have to check in to see where he's at now, but he was at 350 last time I checked. And that was about 6 weeks ago. So this just goes to show that the important thing at the beginning of your learning curve is building a track record. It's not about making a lot of money early on. So small green days are super valuable. And small red days are okay too. These are good lessons. And this would be a great calendar. This would be another decent calendar. A couple days where there's maybe too many no trade days. So I'd like to see fewer of those. But this is a great calendar. Green across the board, fantastic. This one highlights their biggest, the biggest day was red, $500 losing day. Now, because their accuracy is like 90%, even higher, they're profitable, which is good, but this is going to be tough because their average loser is $500. They only have one loser and it's $500. And their average winners are probably closer to 100. So we got to figure out how to tighten up those losses. It's okay to have red days. It's just better to have them be a little bit smaller. This is another example where decent progress, slightly bigger red day, $250. Decent progress, small red day, no big deal. Decent progress. That's a solid month. So now phase 3, you've proceeded to have a good result from your phase 2 proof of concept test. That means you've got a track record and you're getting ready to go live with real money. So what we do in phase 3 is we repeat phase 2 proof of concept. Exact same share size. Everything is the same, except we're doing it with real money. Now, the nice thing with, if you're using Webull, for instance, you're using the sim in Webull. Now, I wouldn't use the simulator in Webull. I would fund an account with a couple $100 and just trade with 1 share. But you want to do your transition from sim to real money, ideally in the same platform you've practiced on. So Webull, you stay with Webull. Thinkorswim, well, that's kind of tough because their simulator's not very good, but again, you could use it with real money with 1 share and you go in Thinkorswim. So if you're in Thinkorswim, stick with Thinkorswim, do your sim there, and then transition to real money. Warrior Trading Sim, we're not a broker-dealer. So now what do? You've learned how to trade in this platform. Well, we actually lease this software from Sterling Trader, Sterling Trading Pro, Sterling Trader? Anyways, so they call it the software different names depending on which broker uses it. But they license this software to broker-dealers. So you can use the same software with Lightspeed. You can use it with Guardian. You can use it with Centerpoint. You can use it with dozens of different brokers. So this is trading software. And a lot of brokers, when you go to their website, they'll just give you their platform. By default, They just say, well, yeah, if you want to use light speed trading, this is the platform to use. But in fact, a lot of these brokers offer multiple platforms, specialty trading platforms. Let's see. So here they've got Sterling Trader Pro. So that's, they've got Dash Trader. So these are other platforms that you could use if you wanted to. Now, most people might not use that. They might just choose to use their standard Lightspeed Trader, but you could choose to use a different one. So if you've learned how to trade using Sterling, then you want to trade with real money using Sterling. So phase 3, the first part of phase 3 is trading with real money and repeating your proof of concept of phase 2. So you just do the exact same thing, but with real money. Now, if you have a good result of phase 3, what does that look like? That looks like, boom, I've done sort of part 1 of phase 3. And this actually isn't the best example because these people are trading more than once a day. But this would be the idea that you do 1 trade a day in phase 3, and you prove that you can have 10 days where you're profitable. It doesn't have to be green every single day. You can have red days, but your losses you keep tight. You bail out on the losers quickly, right? And you don't hold them. And the winners are on average bigger, and you've got more of them. So your metrics by the end of this period would support continuing to trade with real money and increasing your share size. All right, so now step 7 is scaling your strategy to increase that trade size, that share size. So during phase 3, part 1, you're trading with your standard of like 100 shares. It might be smaller depending on where you're at. So what I always say is to first maximize share size, continuing to take just 1 trade a day, because you could be a profitable trader with just 1 trade a day. You don't need to take 100 trades a day. There are people who do, and they are worse off because of it. They're over trading, they're getting emotional, they're getting frustrated. It's not worth it. There's not going to be 100 A quality setups in a day. So focus on highest quality setups, less is more. So you could take that 1 trade. So what you end up doing now is you say, all right, I'm going to focus on, let's break down these phases. So phase 1, what was this about? Gaining experience. So this is sim, and this is just punching the keys, trading as much as possible. Phase 2 is proof of concept. So now you're doing 1 trade per day challenge. If you were successful at that, you've now begun to build a little bit of a track record. And you might do it for more than 10 days. Maybe you do it for 15, 20 days or whatever. That's fine. You build a little track record here, and then you're ready for P3, phase 3. So, P3, this is going to be phase 3, and we'll just do part 1. So phase 3, part 1 is continuing to trade with the same exact share size of 100 shares. And then if you have a good result there, then the next week you go up to 200 shares. And what you want to see is that your profits go up a little bit more. Then you go up to 400 shares, and they go up a little bit more. Then you go up to 800 shares. And now over the course of 12 weeks, 16 weeks, you're scaling from what was initially 100 shares up towards 1,000 shares, 2,000 shares, 4,000 shares, 6,000, 8,000, 10,000 shares. And you can actually increase your positions essentially until you get to the point where you've either maxed out because of the amount of buying power you have in the account, or you're reaching the limit of what your broker can support. Some brokers are going to restrict how many shares you can trade. They just have these different restrictions, and they're really catering to small account traders, not to big money traders. So when you reach one of your thresholds, whether it's I can't buy any more shares because my account size, or my broker won't let me take more shares, then at that point, we introduce increasing to 2 trades a day. We do this slowly because here's the thing. Once you start increasing the number of trades you take each day, you're exposing yourself to a trap in the market. And the trap is that once you start taking more than 1 trade a day, it's very easy to justify, I'll just take 1 more trade. I'll just take 1 more trade. I'll just take 2 more trades. And next thing you know, you can start spiraling. And I don't want to see that happen. So you increase to 2 trades for 10 days. If that's a good stretch, you can stay at 2 trades for as long as you want. If you're ready to go up to 3 trades, you go up to 3 trades for another minimum of 10 days before you scale up higher. But longer is better. And I like to stay at 3 trades for a while and not increase the trade count. So increase to no trade count, basically where you don't cap it, only once you've suffered a drawdown and recovered from it. So suffering a drawdown is going to happen at some point in your career. So, of course, I hope it doesn't happen at the very beginning, but it may. And if that's the case, then it is what it is. So, phase one, you should have been in the sim anyways. So, now flip to sim and now start going sideways because you're in sim. P2, you're going into proof of concept. P3, you're starting to build a little bit of track record, build some momentum, and then, oop, you get a little drawdown. So, first drawdown is really scary because you don't know if all of this was beginner's luck. But you look at those metrics and you realize I was following a strategy. Profits are a byproduct of a disciplined trader who's following a proven strategy. The strategy I'm sharing with you today is a proven strategy. You can see I've been trading in my own account for a very long time. I've got more than $14 million of gross profit in this account. So we'll just back this up right here. Now I'll remind you, as always, my results are not typical. I'm particularly good at cutting my losses, at bailing out quickly. Some of that is natural aptitude. Other portions of it are skill that were learned. And you can learn the skill of being more disciplined in your trading. So once you've had this first loss, it's scary. And the most important thing is recovering from it without giving into desperation, revenge trading, and getting emotional. So once you make this first recovery here, that's when I feel like you've really got it. And that's when you enter what I guess you could probably call phase 4, which is kind of just real money trading, and you're out of kind of the woods of like those early phases. So phase 1, 2, sim, transition, sort of the very beginning of trading with real money, and then we've got sort of phase 4, if you want to call it that. Phase 3 is I sort of leave it as phase 3 because that's just the real money phase. But the very beginning of phase 3 is sort of like this part 1, which is the sort of scary part, and then you've got the other side of it. So there's definitely a distinct difference between me in phase 3, if you want to call it phase 3, and someone who's in their first 2 weeks. But nonetheless, but this is the way that I would approach it. And I have this technique that I've implemented for building a cushion each day. So once you get to the point where you're taking, 5, 10 trades a day, there's a question of sort of how do I approach my day? So I start each day with a quarter of my full size position, and I don't increase that until I'm up at least 20 cents a share in profit. So what this does is it keeps my red days smaller because I don't size up on red days. If I don't get 20 cents per share of profit, then I never size beyond a quarter of my full size position. So it keeps my red days smaller, essentially a quarter of the size that they used to be. But it doesn't sacrifice significant profit on green days. Yes, that first trade, I have slightly smaller size than I might have ordinarily had. But on a good day where the market's hot, I will see more than enough good opportunities. So it's not a problem. It's worth it. And so the result, in fact, of this technique is that when we look at my calendar over the last, 60 days, over the last 90 days, do I have red days? I do. Do I upload them and recap them here on YouTube? I recap every single day. So every day when I finish trading, I do a recap. And so, yeah, I have these periodic red days, but relative to the size of the green days, they are totally manageable, completely manageable. And this is what I want to see. That's what I'd like to see for a beginner trader. So in order for you to kind of get on this bandwagon, it's going to require you to approach the market with discipline. And that's what I think is really nice about sort of saying, I'm going to set this intention. So it's a new month, new me. This is how I'm going to approach it. And again, it doesn't matter if you're watching this in July or August, September, middle of the year. It doesn't have to be the New Year's resolution, but just saying, I'm going to make a commitment that starting tomorrow, this is what I'm going to do every single day. And now you're having a chance to prove whether or not you can be disciplined. If you can't be disciplined, even about following a strategy or following these rules of trading in a simulator, this step-by-step process, you can't be consistent about showing up on a schedule. How do you expect to be profitable, right? So we've got to lay a foundation. Now, for those of you guys that are ready to dive in, I want to remind you right now, we've got our New Year's sale going on. So I would encourage you to check this out. Of course, if you do, you'll be able to be watching right over my shoulder every single day for the entire year. So you're not going to be on your own as you embark on this challenge, this journey, and this New Year's resolution to become a better trader. So you have now learned the 3 phases of day trading and the 7 steps to getting started. If you found this episode interesting, and I hope you do, I hope you'll hit that thumbs up. I hope you're subscribed to the channel. And if you want to tune in for more episodes just like this, you can check out my channel. You'll see tons of free content that I put out there. However, if you want to watch me trading live, you want to see my P&L, you want to be in the community, you can become a Warrior Pro member. So I would love to have you guys join. I'm looking forward to seeing you in the community. And I'll remind you as always, trading is risky. My results aren't typical. So please manage your risk. Remember, this is a marathon, not a sprint. So take it slow and practice in a simulator. So if you're ready to take the leap, we're ready to have you join, and we would love to see you in the community. Thank you guys as always for tuning in. I'll see you for the next upload real soon.